Test, 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 test. Hi all and welcome to another edition of Midday Market Review Live Trading, TraderCast, key trading levels and trading setups for popular markets. Let me just see if this is streaming okay, and then we can start the broadcast properly. It should be on. Here we go.
Moving into 3 minutes now for this non-farm payrolls for February. We're looking for 400,000. The range 200 to 730,000. The unemployment rate we're looking for 3.9%. Average earnings on the month we're looking for 0.5. With the year-on-year we're looking for 5.8%. Private payrolls we're looking for 378,000. Manufacturing payrolls we're looking for 23,000. With average work week hours we're looking for 34.6. We'll also get Canadian data. Just having a quick look here at HSBC's note. They say the retreating pace of new COVID-19 cases in February likely added to an increase in average weekly hours worked. They expect non-farm payrolls rose 400,000 in February. Expect average hourly earnings rose by 0.5% month on month, lifting the year-on-year rate to 5.8 from 5.7. They expect the unemployment rate fell to 3.9%, down from 4% in January.
For some reason I can't see this streaming on YouTube okay, but I hope it's okay. Now a couple of things. I'm gonna jump through all of this about me and all of this stuff. Disclaimer, we'll talk about it later. These are my open positions. So I've closed FTSE 7360 yesterday. I closed my Dow last time at 34.60. Really happy with that trade. I'm still short dollar yen. I opened long gold at 1938.60 and I'm also short DAX at 13,384. Now I'm gonna just leave this open for now and tell you the reasons why gold very quickly before we get non-farm payroll numbers, which will kick in very soon, and that will trigger some volatility. We were looking at gold from this longer term point of view, coiling, and then eventually I was looking for a breakout and a move higher, and if I go into a 15-minute, this was the breakout and then a subsequent breakout, and now again. So I'm long gold at the moment. So this can all change very quickly. I'll show you these positions in a few minutes. I'm also short dollar yen, so nothing new there. That's all
1 minute.
That's all as it is. So I was looking for a retest and a push lower, so really happy with that. And then I also decided to short DAX, and I'll tell you about it in a few more minutes. But let's hear the non-farm payroll numbers and see how the markets react, and then we can go and check out few levels. 423,000 is expectation. 423,000 jobs is expectation. So if we see a much better number, this could be perceived as very bearish, i.e. Fed will have to hike rates and that kind of stuff. So let's see how this plays out.
10 seconds.
This is crude oil, this is gold, euro dollar sterling, dollar yen, and this is Dow Jones.
Unemployment rate of 3.8%. Non-farm payrolls 678,000. 678,000 for non-farm payrolls. The unemployment rate of 3.8%. Average hourly earnings on the month flat with the year-on-year at 5.1%. So just to recap that, non-farm payrolls then coming in at 678,000. The unemployment rate coming in at 3.8%. Average hourly earnings on the month flat with the year-on-year at 5.1%.
Okie dokie. Yeah, this is working. So for some reason I just couldn't see it, but I am live, yes, which is great. Well, hi guys, hi to everybody who is watching. Now, what happened with my positions? Dollar yen moving lower, which is good.
Seeing some revisions to the non-farm
Gold,
payrolls. January read revised up to
holding here.
481,000 from 467,000. Just to recap as well, private payroll 654,000, prior revised up to 448 from 444,000. Manufacturing payrolls 36,000, prior revised up to 16,000 from 13,000. We saw the average weekly hours all employees 34.7 and the labour force participation rate at 62.3%.
So DAX is looking mega bearish here, guys. So this is DAX in 1 hourly, so lower highs. So this was the major point of resistance. It's bearish below. If you remember, we were looking at these levels yesterday. I wouldn't be surprised to see a bit of a oversold bounce back now, so I might look to get out of my position quickly. And if I see a breakout above this swing high here, then all bets are off, and then potentially we could go higher. So I'm bearish DAX. This appears to be bearish. This is bearish in multiple time frames. Even if I go to a daily, this is bearish. Even if I go to a weekly, this is bearish. Either way you look at it, but there's a major point of consolidation here in the past, and then also here, and then also here. So from the longer term point of view, we are reaching some really important levels, daily bearish, 4 hourly bearish, 1 hourly bearish, 15-minute bearish. I'm still staying short. So this is where I'm short from, and this was basically the loss of this support. So I saw this in a shorter term time frame here. Support, and then loss of support, push, retest, and then once we started selling here, I was happy to short. So let me just show you that position, and I'll tell you how I'm going to manage that position right now, and then we can talk about everything else going forward. I'm looking at FTSE around this 7,000 level. That could be possibly a good level to get in and nibble on some long. So this is where I am. This is my current open position. I'm still I'm in the profit here. What I'll do is I'll move the stop at break even. That's the first thing that I'm going to do. The second thing that I'm going to do is I'm going to take partial profits. Okay, so I'm going to take 2 out of this 5, and I'm going to take some money off the table, and I'm going to leave my stop loss at entry with a view to potentially take more to the downside. So if I'm stopped out, I'll be stopped out with nothing for the remainder of this position, but I took some money. This is a shorter term trend entry. I've shown you the 5-minute chart, so 15-minute, 5-minute. They're really suitable for intraday scalping setups rather than swing type trades, which I normally have. But let's see how this plays out. This could potentially become a swing trade. I could maybe even look to add to this position if we see a more selling pressure, but if that doesn't happen, at least my stop is at entry and I'm leaving it open. Where would I like to take profits? A very difficult. 13,000 is probably a good level or a logical level where partial profit taking or a profit taking could occur. Why? It's a round number. There's nothing magical about that level. I've shown you weekly time frame and those previous lows and so on. So if DAX goes below 13,000, all bets are off. This can go much lower, much lower. We are potentially edging towards a bear market here, quite heavily. Okay, cool. So that's where I'm with the DAX, and I'm going to leave it running for now. Very simple, very simple.
It's said here that the
approach
presidential
here.
advisor of Zelensky says that Ukraine will not make any concessions that could humiliate Ukrainians in their struggle for territorial integrity.
The other thing that I was telling you about was gold, and the reason why I got in. So I'll tell you about it again. So gold is uptrending. Anytime we see volatility in the markets,
As the US rate futures show 95% chance of a 25 basis point hike at the March FOMC meeting, unchanged from Thursday.
So I was telling you when I was looking at this over the past couple of days that this is the energy buildup, energy buildup, energy buildup. And if I open this up in a shorter term time frame, we have touch, 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 and eventually a breakout and a move higher. Now, how far can this go? Well, I keep repeating the same story over and over again. Now I'm going to do the same thing. So this is the widest point of this coiling price action extended at the point of breakout would give you this zone up here, 1960, 1965, 1970 as a potential take profit level. Really nothing nothing magical about it. It's literally just a symmetrical move higher. Now if I show you this in a shorter term time frame, this is the initial breakout, and then we had this breakout here. So I was happy to get in and hold this position, although we saw a number of retests, but it made sense. There was a breakout. I'm sticking with the same story. Now, as long as I'm seeing this trend line now hold, so we have a couple of trend lines here, and I don't want to confuse anybody with what I'm doing. What I'm doing here is it's really simple. It's a really simple trend recognition, price action trading, nothing magical here, no big indicators, no secret strategies. This is very simple approach to trading, and it works. So what I'm trying to do here, if you're watching this for the first time, is I'm trying to provide you with a practical application of what I think a novice trader should be able to do. So that's where we are with the gold, and I'm expecting a little bit of a pullback, possibly to this area, and then possibly another rally higher towards this area. If I open this up in a shorter term time frame, this is also a very bullish setup, and I know it doesn't look
disconnected
like it at the moment. It possibly looks different, but these type of patterns, when you see a spike and then this type of consolidation, they have the tendency to break to the upside and then extend this many points to the upside as a symmetrical move higher. So from here, from this previous breakout to where it is now, extended to the upside, it gives you that 1955, 1960 area. So yet again, another layer of evidence pointing to a same or similar area or a zone where other traders might be looking to engage. So I'm currently long gold. I'm keeping this open, and I'll keep you informed about what I'm planning to do with that. So I was making a little bit more earlier on this trade, but I'm still happy to hold, and my stop is at the appropriate level. Sorry, let me just change the time frame here. Okay, so let's do that. So that's the entry, that's the stop. What I'll do is just to be on the safe side, I'll move the stop a little bit higher towards 1935, risking about 3.7 points, or just under 4 points in this trade. Yet again, it's 4 points for me with my broker. If you are brand new and you're trading with a different broker, this could be 40 points for somebody else, depending on how much leverage you get and what type of product you trade and how your broker prices this particular market. But so basically, make sure you understand what you are trading, and that's where we are. So I'm going to leave it there for now and just wait and see if I can get a push higher. If I get a push higher. The last thing that I was telling you about is that I was short dollar yen. Sorry guys, I just got distracted by something that's going on. Okay, I'll show you dollar yen. Euro dollar pushing lower. We talked about how bearish euro dollar is. We talked about key trading level and the significant lows. So I'll go through that in a little bit more detail shortly, but that's where we are. And dollar yen. So I'm also short dollar yen, and I was looking for a continuation to the downside. This was the trend, loss of trend, possible retest, and a push lower. So I'm still happy with this. Now, not the best trade that I took, but okay. So we have. I would like to see this as a kind of rising wedge or a triangle or something like that, rather than this kind of low, 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 lower, low, lower, low, lower, low. But it's pointing to a selling pressure. If we see a breakout, above here, and something like this happens, a breakout and then a retest from above, something like that, then that could potentially create an oversold bounce back and a short squeeze into 115.70 again. So I would definitely get out of this trade in that case. But what I would like to see is a bit of a selling pressure here, and then maybe a retest from underneath, something like this, for another leg lower towards this zone here somewhere. So any of this area here would likely be a point of interest for me as a potential take profit area. So 115, 114.95, 114.90, even down to 114.45. But I'm risking about 50 points on a trade for a potentially up to 100 points gain. So that's where I'm with dollar yen, and I'm going to show you that straight away. So really very, very little that I can add to what I've added already before. So there is our dollar yen. I wouldn't be surprised to see a bit of a selling pressure in US equities when the US markets open in about 46 minutes from now. So US markets are still cash markets are still closed. The futures are open, but cash markets are closed. So that's where I am. My position is still on. You can see that my stop is up here. So let me just reduce some of this so you can see. So my stop is still quite wide. I'm still carrying about 50 point stop here, with the view to take a profit down here. So 100 points of gain for a 50 point of risk. Not the best setup. I like to have
Seeing the Swiss government on Friday widen its sanctions against Russia in a step with further measures imposed by the European Union, tightening exports and financial services to the country over the biggest attack on a European state since World War II.
I would like to see this play to the downside, but not the best risk to reward ratio. For those of you who watched the live trading before, you know that I like to move my stop closer to entry and closer to entry, and then at break even, and then at least in that case risk to reward ratio appears to be better. So you get 3 to 1, 4 to 1, 10 to 1, 7 to 1 risk to reward ratio, but I'm still leaving this 2 to 1. So 2 to 1 reward for the risk taken on this. Not the best trade, but I'm in it. Okay, so let me just see, do you guys have any questions? Do you want me to cover anything? Is there anything of interest before I just start talking about a couple of other things that I would normally cover? We talked about euro dollar, yeah, because I know quite a few people are looking to trade currencies, and this is also posted in the community, and I was saying, look, pay attention to 111.40. 111.40, that was the big level. The price action appears to be bearish below that level, and the reasons, this was a setup from yesterday, so nothing really changed. So I was saying, as long as the price stays below this area here, 111.40, bears are in complete control. And this area here was significant because you had falling resistance trend line, and then you also had a fib here, and then you also has a horizontal and things like that. So there were two scenarios. So the first scenario was a rally into that level like we had here, and then a leg lower from there. That was a first scenario. The other scenario was a loss of these current lows below this blue line, and then possibly a retest like that for a really another leg, aggressive leg lower, which is what happened here. And then the levels that we were talking about yesterday was 110.60. Below that it was 110, yet again nice and round number, and then below that we even had the 110.60, 110.50, sorry, apologies, 109.60, 109.50 and lower, and we are currently hovering just close to 109. So a really significant extension. This is a clear indication of divergence between what Fed is doing and how they're telegraphing to the market what their intentions are in relation to the interest rates going forward, and what a European Central Bank is doing, basically very little, very little. So I would really need to go now to a different time frame to potentially point to some levels of interest. So this is a weekly time frame, so each one of these candles is one trading week. Euro is getting spunked completely. This is there are no buyers. There are no buyers for euro. Euro is getting destroyed. Everybody's selling it. There is no willing buyers, and it's not just the central banks. It's also the fact that we have geopolitical risk in Europe currently, and that's not working out to be encouraging for anybody who is looking to add to kind of their long positions with euro dollar. So what would I do here? I can't really do anything. If you're not in this trade already as a short, the only thing that you can possibly do is to wait for some sort of bounce back, and then look to short
Fed's
again.
Evans says job numbers have been quite good for some time on CNBC. Says labour market is in a very solid position.
So we're just hearing from Fed now that they think that market is in a good shape and it's solid position, and that basically means, hey, we
does say though there is a tremendous amount of uncertainty regarding Russia and Ukraine.
We will hike rates, and when they're hiking rates, that's normally perceived to be good or bullish for the dollar. So Federal Reserve hiking rates is good for US dollar. So therefore this is US dollar strength and euro weakness. Quite often when that happens, you also see a pullback in equities. So Dow Jones, Nasdaq, S&P, they're all.
And Evans says that this jobs report doesn't really change anything that the Fed Chair Powell is positioning for.
Before I go and start talking about Nasdaq, I do want to cover cable, because we talked about Nasdaq before, how bearish it is as well. This is cable, really bearish, moved lower as well. Sterling dollar, this was the area of interest, 133.65, very similar setup to what we had in euro. This was a coiling price action, and I was saying if we see an oversold bounce back, which is basically the distance from the previous breakout to the upside, gives you this area, that's your resistance. Otherwise, and then another short sell from there, or the other setup was loss of these lows, maybe a retest from above, from below. So previous support, loss of support, retest, and then you see aggressive selling, which is what's happening right now. So that's where we are with the cable. Yet again, if you are not in this position, very difficult to short now, because if you are shorting, you could be shorting too late. But if you're crazy enough to try and buy these lows, at least at this point in time, this is 1 hourly, this is the 15-minute. Look, there is not a single green candle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 red candles, one after another. Okay, not even a little pause. So if you're buying now, you're completely delusional, because you are catching the falling knife and it'll slice your fingers. So you need to wait for some sort of basing pattern. So if the price stops here and starts creating something like this, or something like this, or something like this, or something like this, then potentially you can say, okay, short sellers are taking profit, I might be a worth of punt, counter trend, speculative, small position size, if you feel that that's what you really want to do. Otherwise, just stay away from it, because you're not in it, you missed it. Stay away from it, and wait for the market to come to your
More
level.
from Fed's Evan says, with inflation pressures, we need to be moving towards a more neutral monetary policy. Just moving to some fixed income, German 10-year bond yield down 28 basis points this week and set for the biggest weekly drop
gold
since
is moving
December
higher.
2011.
So let me show you that gold trade again. I am happier with this now. So gold, this is that gold again. So what I'm going to do is I am going to move the stop. I'm going to move my stop just below entry, maybe one. No, I'm going to move it at entry. So my stop is at entry, and now I have no risk. But there is always risk. There could be a slippage, there could be God knows what, it could be a gap lower. By the time I get filled, I could still, but at least I have my stop here, and I'm happy. I would like to see, this candle is really encouraging. The shape of it. So if it finishes where it is, that would be good. Potentially we could see a little bit of a follow through to the upside like this, and towards that 1960, 1955, 1960, 1965, the levels that I was telling you about earlier. Happy with this, really happy, leaving it on, not touching anything, not taking profits just yet. Okay, so that's where we are with gold. So this is the gold here. So hopefully you can see this. I think you can, otherwise I'll just, yeah, this is gold here, that's what I was telling you. And then also that DAX trade is here, that's doing okay. So that was the entry, loss of that support, basing here, and I'm expecting to see another gradual move lower, another 200 points to the downside. I would be ecstatic with this position, really would. But I would like to see a loss of these lows and continuation of the selling pressure to the downside. What I'll do is I will move the stop slightly below my entry, so just slightly below my entry, so about 37 points. I'm gonna lock in another just over 100 euros on this trade. I took some profits already, so you've seen that. I moved the stop loss at entry. Now my stop loss is below entry, if you're confused with this, why is my stop below? Because I'm shorting it. I'm short selling this. Therefore, I am opening my position by selling first, and I can only close this position by buying back at some lower level. I need to buy in order to realize the profit at the lower level. Okay. Otherwise, if the price rallies and I buy where I entered, I'm breaking even. Okay, so my stop is below my entry. That means I'm locking in some unrealized gains here, but hoping for more downside. So I'm bearish. I am bearish. I'm looking for a continuation of this selling pressure to the downside. Hopefully I'm explaining this in a very, very simplistic way, because as I said at the beginning of these sessions, there's nothing magical about what I'm doing, guys. This is really a very basic approach to trading financial markets, recognizing the trend, using the basic price action, very simple annotations of horizontal lines and some trend lines and pattern recognition. So I'm not doing anything using indicators, anything using oscillators, anything using kind of trading strategies which involve a combination of different things. I do look at that. I call that multiple layers of evidence, but that's for the people who are a little bit more advanced. This is really aimed
Fed's
for
Evans
people
says
who
doing
are
25 basis points of rate hikes at each meeting may be more than essential.
And this is what I think people who are in that stage should or would be able to do if they invest a little bit of time in learning how to trade. Okay, cool. Now, the other thing that I want to talk to you about is Nasdaq. And Nasdaq is setting up for a fairly bearish setup, and also FTSE. I should be talking to you about FTSE as well. Okay. So this is Nasdaq. Nasdaq appears to be bearish. So we have high, lower high, lower high, lower high, lower high. Brilliant. 4 hourly. Rising wedge, or an oversold bounce back, if you want to call it like that. And then I was looking at this area here. Swing low, swing high, swing high, swing high. Broken. Retest, 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 retest. Sorry, I'm boring you, but you see how many times I said retest. So that level is embedded in memory of traders who trade Nasdaq, because the price traded around that level, either above or below, or tested it.
The effective Fed's funds rate unchanged on March the 3rd at 0.08%.
Number of occasions, so it's likely that it might react as well. So then basically what I was looking for is I was looking for a rally into that zone and then a sell-off from there. So that's what I was looking for. Now that didn't really occur because we had this, but it didn't come really to that level, and so let's see. So the other thing that I can do here is I can do something like this. So we have a mini version of this developing here. So if I go into a 15-minute time frame, it becomes clearer. This is the wick in higher time frame, but in lower time frame it's the candle, candle, candle. Okay, so not the exact science, but more of a looking at the levels where other people are thinking of the same thing. So this is a little trend line, oversold bounce back, loss of support, retest, rejection to the downside, and then another attempt higher when we got much better than expected non-farm payroll numbers. And now the price is waiting for the market to open. So when market opens, what the technical picture is saying is that we could possibly see two scenarios, and both scenarios are bearish. Both scenarios are bearish. Okay, so the first scenario is that we see a sell-off, loss of these lows when the market opens, loss of these lows, retest, something like this, loss, retest, and then a gradual move from here all the way down to these lows at 13,740. That's one scenario. The other scenario is that we could see a rally and then a rejection here. So we could see a price rallies from here, attempts another go higher, and then from here it sells off. So then in that case top would be above that level. So both scenarios are really bearish. I can even move this level down to 14,060 or even 14,000 even. So even this area here would be of interest. Why? Because it's a round number. Okay, so it might not be the exact level, but it's more of a zone of interest for anybody who is bearish, because they will likely react to that level. Now, from the trend lines point of view, do we have a trend line here? Okay, so I think we do. Okay, so we can have one here, we can have one here. So there is a trend line. You need multiple touches for the trend line to form. We can have a better trend line here. So a number of touches here, the wick here, and then another wick here. So yeah, I'm happy with that 14,000. Okay, and then also what I would do is I would take the fib retracement from this swing high to this swing low, and then this gives me a 38.2%. Now from this swing high, this swing low, it's more between 50 and 61.8. Yeah, that doesn't work, just these two. Okay, so this zone here would then become a zone of interest, and it's likely going to invite some attention. So here we go. What would I like to do with Nasdaq? As a disciplined trader and a trend follower, I would likely want to short sell Nasdaq. Where? Around there somewhere. 14,000, 14,050, 14,080, 14,100. So that's what I would like to short. Where would my stop be? Depending where I get in. But my stop would likely be 100, maybe even 200 points higher for a swing type trade. Where would I expect to take profit? Well, at the current swing lows towards 13,700. So if, let's say, I get filled at 14,000 and I'm risking 100 or 150 points on the upside, I would like to take at least 300 to 350, 400, 450 points out of this trade to the downside, because then it makes sense. Then it's at least 2 to 1, 2.5 to 1, 3 to 1 risk to reward ratio, and that all makes sense. So I'm going to pay attention to this. This is a 15-minute time frame. We have about 25 minutes before the US markets open, before the US cash markets open, and I would like to see how the price might react in that case. Okay, is there something that you need me to cover in addition to what we talked about? Let me know. Hi all, we've been going on for about 40 minutes now. For those of you who are joining us late, just to let you know, I've started earlier today because we have a very important US data release, which is called non-farm payrolls, and that's basically showing how many jobs have been created in US in non-farming segment of the economy over the past 30 days. So now, US equity briefing says US futures fell as concerns that war risks are intensifying after a Ukrainian nuclear power plant briefly caught fire, overshadowed a stronger than forecast US employment report. S&P 500 contracts briefly came off session lows after data showed job gains accelerated while wage growth slowed sharply. And then we've heard a few things from Fed's Evans. Fed's Evans thinks job numbers have been quite good for some time, according to CNBC. So he's got an interview with CNBC. He also feels that with inflation pressures, we need to be moving towards more neutral monetary policy, therefore hiking rates fairly quickly. That's why you're seeing selling pressure in Eurodollar, selling pressure in cable. Fed Evans also thinks that doing 25 base points rate hikes at each meeting may be more than essential. So now they were talking about 50 basis points in March, and now they're saying maybe 25 points and another 25 and another 25 and so on. So let's see how that plays out. Okay, Akunda, hey, good to see you, buddy. He's saying US crude would be great in terms of the effect non-farm payrolls numbers will have on that and the announcement of rate increases. Thanks. Okay, well let's talk about crude oil, and crude oil is not moving on non-farm payrolls or rate hikes. Crude oil is moving on a pure geopolitical risk. This is currently used as one of the safe havens, and what I mean by that is if you see any volatility increase because of the geopolitical tensions, because in the current war one of the major oil producers is currently involved, i.e. Russia. So market participants are buying oil as a kind of safe haven, because the only way this price can reverse and go softer if we see significant destruction of demand. There is currently so much demand for this commodity, and one of the producing countries is involved in military aggression against another country, and the number of sanctions have been imposed on Russia as well. Currently, some of these sanctions are not involving energy, i.e. the export of oil and gas, but who knows? Okay, so when you have all of that, this is the result. The crude oil is currently trading at 111.60. So crude oil above 100 is normally perceived to be a really significant development, because everything goes up, the cost of transportation goes up, therefore the cost of goods and services go up as well, and that has direct impact on inflation. And then with inflation, central banks are trying to slow down the overheating economy by doing what? By hiking rates. It's a vicious circle, and that's all it is. So what would I like to do with the crude oil? Well, you can only look to buy. You can look for a pullback to buy, or you can look for a breakout to buy. So breakouts above these current highs, something like this. So let me just go into a shorter time frame. So there is that energy buildup, energy buildup, energy buildup, triangular in shape. Buyers cannot push the price higher, sellers are coming in, sellers cannot push the price lower, buyers are coming back, defending the price, pushing it higher, sellers are coming in, energy is building up, energy is building up, and this normally precedes explosive reaction. So how far can this go? Well, the basic price action will tell you that you would take this many points and extend it higher, and that brings us towards 120. So how can this be traded? With caution, with caution, but this looks like a bullish continuation pattern, and the name explains what they do. They tend to break in the direction of the prevailing trend. They tend to break in to the upside. You might get a breakout, retest, and a push higher, in the same way as I traded gold earlier. Okay, in the same way as I traded gold earlier. So it's a very similar setup. The only thing is this is 1 hourly and this is a 15-minute. So something like this might be of interest. Trading Indian. Oh, you're Raj. You're Raj. So okay, yes. Gold is covered. I'm currently long gold. I'll show you where I am with that in a second. Yeah. So what we've covered so far is DAX, Nasdaq, we've covered dollar yen, we've covered gold, euro dollar, sterling dollar, and dollar Japanese yen as well. So okay, so I'll go back and do a very quick recap of what I've done. Is gold is bullish. So Raj, I'll just do this very quickly. Gold is bullish for me. We were looking at this over the past several days, and I was looking for a breakout, retest, and a move higher. Okay, and this is basically what I got: breakout, retest, and a move higher. And now I'm looking at this, where I could possibly even add to this position. And see if that makes sense. So let me just show you where I am with gold. Sorry. So this is the gold trade that I'm in. So I'm long at the breakout at 1938.60. My stop was below, stop moved higher, and people who watched this from the beginning, they saw me move the stop here. I didn't take any profits on this trade. I didn't take partial profits. I took partial profits on DAX, but I'm just leaving this here for now. I would like to see if we get a breakout above this area here, and then I'm looking for a potential limit order towards 1960, 1965, 1970, 1975. So I'm going to have a limit order at 1970 just as a guidance, but this can go to 2000 very easily, absolutely very easily. So I'm in this trade, really happy with it, and I've managed it well, and I'm leaving it on, happy with this trade, absolutely happy with this trade. Now sorry, I know a few people joined us. This is where my trades are. So that FTSE is closed. Dow that I had, that's closed. I had 3 closes there. I'm short dollar yen still. I decided to go long gold, and I'm also short DAX. These are my current trades. Okay, so my DAX, I took partial profits on DAX. So let me just show you where I am with that. Okay, and what I was looking for, see, I don't like this reversal here. I took partial profits in DAX, but I still have some position here. What I've done is I moved the stop below entry, so I'm going to move the stop loss a little bit lower, and I'm going to take another 2 out of this trade. I'm gonna take another 2 out of this trade and leave one just running. Okay, so I'm happy with this. I'm happy. If it should have broke these lows, it should have broke these lows and carried on moving towards 13,000. So I had 2 take profits out of this trade, and the reason why I went into this trade, it's fairly straightforward. You have downtrending market and then sequence of higher lows here, which is oversold bounce back and then a loss of support. I'll show you this on another chart with the white background, because what I've noticed that the white charts are probably better to see. But I'm leaving my stop at this level. I'm still locking in about 60 points on this last remainder of this trade. Happy with it. I'm gonna leave it run and do that. So let me just explain to you what I did with DAX. Okay, and if I'm repeating this for some of you who've seen this already, apologies, but basically this is what it is. Okay, so downtrending market in 4 hourly, downtrending market in 1 hourly, downtrending market in daily. So what do you do in downtrending market? You look into short sell. How can you short sell? You can short sell the rally into resistance and the rejection, or you can short sell the loss of support. There is a support. Low, higher low, higher low, higher low, higher low. Loss of support, off we go lower. Now this is a basing here. So what I would like to see, I would like to see a loss of these lows here and a gradual move lower for another leg towards 13,000. Yeah. The other opportunity that can possibly happen is we can see an oversold bounce back towards these areas here, and then from here we can have another leg lower, something like that. Why? Well, very simplistic. You have sequence of high, lower high, lower high, lower high. Do I have 3 touches? Yes. Is this a trend line? Yes. Brilliant. Is this a horizontal? Yes. Now, if I do the fib, and I keep repeating the same thing over and over and over, there's my 50 and 61.8 zone. So this area here is like a magnet for people who would like to short DAX again. Okay. So if the price does go there eventually, if anybody's maybe shorting too late, they have their stops too tight, their stops will be picked up and the price will go there. Then we could see another leg lower. So as long as this area holds at 13,400, 13,420, as long as that level holds, bears are in complete control and they would likely be looking to find the reason and confirmation to short sell this market again. Okay, so that's where I am, and I'm also short dollar yen. I'm also short dollar yen. Thank you, thank you. And I'm also short dollar yen. So let me just show you that very quickly. This is playing out quite nicely. So now this is a smaller position, but I'm risking 50 points to potentially make 100, and I'm short from this area here, 115.45, and I'm looking for loss of these lows and a gradual move lower towards 114.80, 114.60, 114.45. And if I see the loss of these lows, I would likely be moving my stop lower. Very, very likely. But so far, I'm just leaving it as it is. Okay, just leaving it as it is, not changing anything on this trade. And that's pretty much it. So we've covered Nasdaq. Keep an eye on that 14,000, 14,050, 14,080 for a shorting opportunity. We've covered a lot actually. I've been talking for like almost an hour, and that's it. So guys, it was lovely talking to you all. Stay safe. If you need me to cover anything else very quickly, this is your time. Otherwise I will be stopping this broadcast, and I'll be back with you on Monday. I'll be back with you on Monday. Let me just see who do we have in today. Slightly smaller group than normal. Alex, Dani, Dimitri, Lad, Colin, Robbie, Sean, Said, Ahmed, Sam, Nyogu, Kabogo, Rose, Kay, Mr. Ngura, Tim, anybody else who is watching us. Welcome, welcome, welcome. Akunda, massive apologies for today, and we'll speak soon. We'll speak soon. So, stay safe, happy trading, and bye for now.